Yeah, this is how much I made today. But this is how much I've made in my whole account. Minus $29. Today was the worst day. Like, bro, I literally lost $27 today. We started this account with $50, and now our account is sitting at $19. So basically, we lost 50.9% of our account. Then you can do the math. It's 50.9% of our account. Yeah. So let me just do a breakdown of the first two trades. The first trade, I actually lost $0. I actually didn't lose anything. Then I proceeded to take another trade because I found another opportunity. But still, I lost this trade again. So I lost two trades that were reasonable. Then from there on, I just started gambling my way out. And let me tell you a story. As we were gambling, I ended up getting as high as $48. But this is what happens when you're not mentally prepared for the day. I already gambled my way up. I think we are down $30. So I gambled my way up to like $48. Then from there, I was like, what if I just keep on gambling and make it up to 50? Then from there, 48, my account dropped down to $19. And that's when I realized that, okay, it's enough. I spent more than 2 hours on a chart today, something I never do at all, but I ended up doing it today. So all of that, apart from all of that, let's just get back into the trade that I would have actually like, yo, I don't even know what to do, bro. Like, anyways, anyways. So this is what happened. So you normally know I trade from 10 a.m. to 11 a.m. basically on Nasdaq, 10 a.m. to 11 a.m. Right? So as you can see by this time it's already 9:45. Price tapped into this daily order block. We have a daily order block here, both on Nasdaq and on S&P. This daily order block was tapped in on S&P, but we didn't tap into this daily order block on Nasdaq. But on the 1 minute, as you can see, as soon as price time to this daily order block on S&P, price actually started going up, right? As you can see, we had an inverse. I actually wanted to take this trade, like I genuinely was watching this trade. I wanted to take this trade, but I didn't take it. Why? Because I didn't see the same set of play on Nasdaq. Because Nasdaq on the 1 minute we didn't tap into this order block at all. So I didn't just want to take this trade because Nasdaq didn't tap into this order block. But look, after we tapped into this order block, we came all the way down, created a 1 minute inversion. Then price came in again and tapped into this gap, this 1 minute fair value gap. Now I wanted to take this trade and aim for these 1 hour highs. But on Nasdaq, it will be hard for me to take this trade. Why? Because we didn't tap into this order block. So I was still thinking maybe price might later on come back to this order block, but will stop me out. So I basically thought price was going to stop me out. That's why I didn't want to take a buy trade because for S&P to tap into this order block, I was thinking maybe Nasdaq would want to also tap into the order block. So I didn't want to take a buy trade, right? So all of that, that's all. So we ended up sweeping out this 1 hour highs. We stopped at these 1 hour highs. As you can see, we stopped at these 1 hour highs again. This was the second trade I actually took. So on this 1 hour highs, I think we had a 1 minute fair value, 1 hour fair value gap, I think. I need to check. I think we had it. Okay, no, it was the 4 hour fair value gap. Okay, so let me just hide this real quick. Like, bro, this shit really hit me so hard. I even ate pizza today. I wasn't even feeling it, man. Like, I have never in my life eaten pizza and not be happy. But today I ate pizza and I wasn't happy. Like, I felt nothing at all. Okay, so yeah. So on the 1 minute, we ended up tapping into this 1 hour fair value gap but we didn't have a 1 hour fair value gap on Nasdaq. So, but we had a 4 hour fair value gap. So they both tapped into the fair value gap at the same time, bro. So the both of them tap into the other fair value gap at the same time, right? So yeah, as you can see, we swept out these 1 hour highs. Also, at the same time, we swept out these 1 hour highs, right, on S&P. So this is what happened. So after we've swept out these 1 hour highs and tapped into that fair value gap, obviously I thought we were actually going to inverse this fair value gap. But as soon as I started seeing price make an inversion, because right here we are in a 4 hour fair value gap. Yes, on Nasdaq we are in a 4 hour fair value gap, and we just swept out these 1 hour highs. So we we can see an inversion right here, 1 minute inversion. So we have this fair value gap. So all I needed for price to do is to return back to this fair value gap, and that was exactly what I did. I remember now. This is exactly what I did. So I took my short position right here. I remember this is the short position I took. Short position right there. My stops was right here. Now this is what I said. If price sweeps out this level right here, I'm going to take my stop loss to break even. Right now, as soon as price swept out that level, I put my stop loss to break even. Where is it? Where is it? Where is it? To break even exactly right here. Exactly right here. So price just came, pushed down, then pushed back up. After that, I was like, okay, price actually kept on going higher. Now, this is the interesting part. This is the interesting part, or this is the sad part. I don't know why I'm saying interesting. This is the sad part right here. So we ended up pushing up to this 1 hour fair value gap, same as S&P. So we ended up inversing this 1 hour fair value gap right here, but pushing upwards to this 1 hour fair value gap, right? This is the 4 hour fair value gap is this huge one, while this is the 1 hour fair value gap, this small gap right here. Okay, simple. We ended up pushing into this 1 hour fair value gap on Nasdaq and on S&P. Now, all I needed to see price to do was inverse this fair value gap. And in this setup, we had 3 reasons to enter this trade, but the trade still failed me. 3 reasons to enter this trade, but I think I know why I lost this trade. Again, because even if I was trading on the 5 minutes, I would have still lost. I would not have lost this trade, but with my account size, I would have lost this trade. So this is an example. So okay, so we've tapped into this 1 hour gap on S&P and Nasdaq. Now all I needed to see is price inversing this gap, right? As you can see, we need price. Let me just delete this 4 hour gap. I don't think we need it anymore. So we need price to inverse this gap on Nasdaq and on S&P, this 1 minute fair value gap. And what did price do? We actually inversed the gap. We inversed the gap. Now, after inversing this gap, I was like, wait, I still need more confirmations. I went to the 5 minute time frame, and guess what I saw? A 5 minute CISD, right? This is a 5 minute CISD that I saw right here. So price ended up taking this the CISD level, also like a market structure shift. Now, this is actually a clean A plus setup. Why? We've tapped into a higher time frame fair value gap. We've made a 5 minute CISD. What do we need price to do? Just keep pushing to the downside. Literally all we need price to do. Now, on the 1 minute, I went back to the 1 minute, right? Look for better entries. As soon as we swept out low, we were coming back up into this fair value gap, because that's what I needed price to do. We turned back into this 1 minute fair value gap, and that was literally where I took my trade off of. As you can see, this red line, I specifically marked it out. 20,374 was where I entered, and as you can see, the third trade I took, which was the second trade I took, was 20,374.6. 20,374.6. This was exactly where I entered my trade of this 1 minute fair value gap. Of this 1 minute fair value gap here. So I took my stop position right here. My short position was right here, and my stop loss was literally at this high. Literally at this high. But we got stopped out. Why? Because on the 5 minute, price was literally aiming for this fair value gap right here. Even if I was trading the 5 minute and I entered right here of this fair value gap and I put my stops right here, bro, I am risking $7.8 on a trade. with a $46 account. $7 in it, risking $7 in its $46 account. Like that's too risky. So that's the issue here. If you don't have like a huge account, I don't know, going into trading is kind of really going to be really hard, but like it's still okay though. It's still okay. But still. So from then, after I lost this trade, that was when my mental started kicking in. From there on, that was when the gambling began. So any move I see, I take a sell, I take a buy, I take a sell, I take a buy. Like literally sell, buy, sell, buy, sell, buy, sell, buy. Like, bro. But I didn't stop from there. I kept on gambling and gambling. Almost lost it all. So yeah, this is a mistake I will never in my life repeat anymore. Yeah. So our account just literally went from 50 to 19 in one day. Yeah. So at the end of the day, it's my fault for not sticking to my trading plan. And you guys should also learn from this. Do not feel like you can gamble your way. Even if you gamble your way and win, the market is always going to collect the money back. If you lose a trade with your strategy, you followed your plan, the market is going to reward you. But if you win a trade because you were gambling, the market is going to take it back. So yeah, I think in my whole lifetime, this should be my second time gambling on a live account. Whole lifetime. This is my second time. The first time I actually gambled was January, man. Like back then in January, like early January. And this is my second time gambling. So from now henceforth, I'm just taking either the max trade I'm taking is two trades. If I have a win, I'm stopping for the day. If I have a loss, and I'm like, okay, let me just see if I can take one more trade. If I see a better setup, then I might trade. So yeah, as I've learned again, I just have to be more disciplined in my own trading. So yeah, that's real. We'll call it a wrap and let's see what happens from now on. Yeah, peace out.